Hi, my name is Kate Sellers. I'm with Charles J. Sellers Insurance Agency. We specialize in insurance for physicians and medical practices, and we've worked with many residents over the years. This presentation is intended to provide some basic, useful information on some of the insurance products that residents should be considering. First of all, there's disability income insurance, which I'm sure most residents have heard about from their colleagues. Disability income protection is what pays you a monthly benefit if you become disabled by either an illness or an injury and you can't practice medicine in your field. The risk of disability is real, as of course any resident is in the position of knowing. The statistics are that 1 in 4 20-year-olds will be disabled before retirement. So that's a pretty high risk, and it's something you need to address, especially with as hard as you've worked to get to where you are and continue to work. You want to protect yourself in case you get sick or get injured and can't work in the field that you're training for. You might be wondering if you need disability income insurance, and the answer to the question who needs disability income protection is that it's most people. It's anyone who needs their income, which is most of us. If you didn't have income from your job, how would you pay your student loans? How would you pay your rent or a mortgage, your car loan, your other monthly bills, and just generally support yourself? And especially if you're supporting others, it's even more important. But it's important for everybody who needs their income. For most of us and for most physicians, your ability to earn an income is your greatest asset. It's a bigger asset than your car or your home or anything else. Just as an example, if you were to earn $200,000 a year for 30 years, that's a $6 million asset. And for many physicians, that number is a smaller number than what's really going to happen. So you want to protect the huge investments you've made, your tuition you've paid for college and medical school, all the time and sweat equity you've put into getting to where you are now. You want to protect that investment you've made and your ability to earn an income, especially since, particularly for physicians, your ability to earn an income depends on you being healthy and healthy enough to perform your job duties. You might be wondering whether you need to buy disability income insurance now, or if you could put it off and wait because, you might be thinking, I'm young and I'm healthy now, and I don't need it now. Should I buy it now? And it's important to know that disability income insurance typically is medically underwritten. That means the insurance company is going to ask you questions about your health history, perhaps look at your medical records. In many cases, we'll ask you to get a physical with lab work, blood and urine to assess your health. And if you've had significant health issues, it can be difficult to obtain the coverage that you want. Even some more minor health issues, for example, if you have a history of back problems, you might be offered coverage, but excluding coverage for your back. And of course, we all know people don't tend to get healthier as they get older. So when you're young and healthy, it's the perfect time to buy coverage because you have the best chance at getting full and complete coverage. And then when your income increases in the future, as it will, you can add onto the coverage that you buy now. Another question we get a lot is, do I really need to buy disability insurance? Because I'm always going to be working for an employer who will provide me with disability insurance. And if you join a group or work for a hospital or a health system after residency, you will likely be offered employer-based coverage. But there are really important things to know about that. One is that what you're offered can vary pretty drastically from one employer to another. Some employers might offer you very high quality, high limit disability insurance, and others may offer you disability insurance that isn't all that great, or maybe doesn't cover a huge part of your income. So employer plans, what they do is they cover a percentage of your income, but with a monthly cap. For example, they may say, we'll cover you 60% of your income with a monthly cap of $10,000 or $15,000. That cap can vary, and it's very important to know what that cap is, because most physicians will have income above the cap that will not be insured. So if you have your own coverage and then layer the employer coverage over it, that's the best way to insure more of your income. Also, it's important to know that that employer-based disability coverage typically cannot be taken with you when you change jobs. It's not what's called portable. So if you want to leave one position where you have good disability insurance provided and go to another position where maybe there isn't disability insurance, or the disability insurance isn't all that great, in most cases, you're not going to be able to take that coverage with you. Your own coverage that you pay for and control, you can take with you. And in many cases, you can take it with you wherever you go. It's also important to know that if your employer provides you coverage and the employer pays for it, you get benefits. If you actually become disabled and have to collect it, those benefits are taxed like regular income. So if you pay for it yourself, like your own coverage, typically speaking, if you collect benefits, they are tax-free. So that's important to know, because if you're thinking I am getting $10,000 a month and you don't realize that it's taxed, obviously after taxes, it's not going to be $10,000 a month. And if you can apply now before you go to work someplace where you're provided insurance, that insurance that you're going to be provided won't be counted in the total amount of insurance you have when an insurance company is evaluating how much insurance to offer you. So it's really a good time to put some personal insurance that you own and control in place before you take that first job out of residency or fellowship. So some additional important points to consider. You really should try to purchase disability insurance that has some renewal security. There are some types of group coverage, for example, with employers, that can be canceled by the insurance company. You want coverage that you can renew every year, or however often you pay your premium, when you pay your premium. You want protection that is based on your own occupation, your own specialty. An insurance policy is a contract, and terms are defined in that contract. So disability is one of those terms that is defined. And not every policy defines disability the same way. And whatever that definition is what decides when you are considered disabled and receiving benefits. So you want a policy that defines disability in a way that says that you're disabled if you can't perform the duties of the specialty that you're training for. That gives you the most protection. Of course, the affordability of coverage is going to be a big consideration for you, especially while you're still in residency. And that's an important factor to take into account. How much does this coverage cost? It is important to recognize that sometimes, and you see it in your profession, sometimes bad things do happen to younger people. We've had younger physicians that we've insured injured in accidents, biking accidents, just freak accidents. We've had physicians experience illnesses, and typically with a young physician, we see them, perhaps they're disabled for a period of time while they recover, and then they can go back to work, fortunately. And during that period, when they're disabled, they have the income coming in from disability insurance, and not having the financial strain certainly helps in that recovery process. We also recommend that you review your disability insurance along with your other insurance every few years, because, of course, circumstances change. Your income will increase. You may change jobs and your employers offer different benefits. You may get married or have more children and have more people counting on you for their financial stability. So with all of those things that can change a lot, especially in the early years of your practice, it is really important to review your disability insurance every few years with a trusted agent or broker, just so that you can make sure that your insurance coverage fits your current circumstances. Many insurance programs will offer special financial underwriting rules for residents. Disability insurance is financially underwritten because insurance companies want to make sure they're not over-insuring anyone, so that if they get disabled, they have an incentive to go back to work because they'll make more working than being disabled. In order to do that, insurance carriers look at how much money you're making and what other disability coverage you have in place. So they have charts that say if you make this much money, you can get this much coverage, and we're going to deduct from that the coverage you have in place. So, as a resident, you're in a special circumstance where your income is going to increase pretty drastically after your residency. And so carriers have special rules to accommodate that. Typically, you can obtain about $5,000 a month of coverage without regard to what your actual earned income is, and also without regard to the group disability coverage that you likely have through your residency program, so that you can kind of get that basic amount of coverage in place and take that with you as you go down the road from residency, and add to it as you need to, but at least you have that basic amount in place. There are optional riders that can be added to disability insurance policies, and two that are particularly important for a young physician. One is a cost of living adjustment rider. And what that does, that comes into play if you're on a long-term claim. After typically a year of being disabled and on claim, your benefit is examined, and so is the rate of inflation over the last year. And so there'll be some type of inflationary index that's applied to your benefit, so that if inflation is high and costs are going up, your benefit gets a bump to help you keep up with the increased costs. So since young people have the biggest chance of being disabled for many years, you want that type of rider on your policy, because the amount of coverage you purchase today, which may seem like plenty of coverage, won't go as far 10 years from now if you're on a long-term claim. The other type of rider that's important for young physicians is some type of a guaranteed future purchase option that will help you ensure what we call your insurability. Again, since increasing your coverage typically requires proving that you're healthy, if you have this kind of an option on your policy, when your income increases, you can increase your coverage without, again, proving your good health, which is obviously an advantage if you've developed any kind of a health condition. Another important consideration when you're a young physician is life insurance, especially, if you have a young family, people depending on you to earn money for them. Life insurance is very important. There are two main types of life insurance, and they both have their purposes and appropriate times to purchase. Term insurance, which is very affordable, death protection insurance, and it's for a set term of coverage, or there are types of permanent insurance, which you can keep in place for your whole life. Whole life insurance, universal insurance. It's typically more expensive, but it has other uses in addition to just death protection. Typically, when we're talking to a young physician, they'll want to put a nice big chunk of term life insurance in place, at least, because it's a very affordable way to get a lot of protection from the unexpected. We usually say just go ahead and put $1 or $2 million in place if you have a young family as a starting point. And term life insurance really is very affordable. And of course, you're going to already have some personal lines insurance in place: home, auto, umbrella. On all of these, the big consideration that you need to be thinking about as a resident is liability coverage. There's liability coverage on your homeowner's policy and on your auto policy. On the homeowner's policy, that is in case, somebody slips and falls in your residence and they sue you. That's when the liability coverage on your homeowner's policy comes into place. Renter's insurance is a form of homeowner's insurance. So if you rent, you want to make sure, even if your landlord is not requiring it, that you carry a renter's policy to get that personal liability insurance. Obviously, it's also nice to have the property coverage that covers your belongings in case anything gets stolen or destroyed in a fire. But I think even more important than that for a resident is that personal liability coverage. It's also on your auto insurance. Again, it covers your car in case anything happens to your car, but it protects you in case you're in an accident and someone sues you. And your umbrella liability coverage, we recommend that anybody in your position purchase an umbrella policy. They're not very expensive, and it can put an additional layer of liability insurance over your home and auto policy. That's important for you because if somebody sues you for, say, a slip and fall at your house or in connection with an auto accident, and eventually there's a judgment against you that is higher than your insurance limits, not only can that plaintiff collect against your assets, they can collect against your future income. They can garnish your future wages. So you really don't want that to happen, obviously. And that's what having adequate liability limits on your home and auto, and then having that umbrella liability policy is so important for in the position you're in, where you do have a significant future income stream and you need to protect it. One last thing I want to mention, this can often become important for young physicians as you launch your careers. You may be asked to sit on various boards of nonprofits or even a for-profit organization. If you're ever asked to do this, it's obviously a wonderful thing to do, a way to serve your community. But you should always ask if the organization carries directors and officers, or it's also called D&O, liability insurance, and ask for proof of it. And they should be able to provide it to you very easily. What that is it protects people serving on boards in case you're sued in connection with decisions that the board makes. Because there are situations in which people who sit on boards can be held personally liable for decisions of the board. So having that, if the organization carries D&O liability insurance, that can defend you and also provide for a defense and also indemnify you if there ever was a judgment taken against you. So very important, again, to protect your future income. So I hope that this information is helpful to you. If you have any questions, please reach out to us at Charles Sellers Insurance. Our contact information is here and is also available on our website at sellersinsurance.com. Again, it's Charles J. Sellers Insurance. We're the endorsed insurance administrators for the Medical Society of the State of New York, as well as many county and district medical societies across New York State. Thank you.